We recently learned that Ark Invest believes Tesla will increase in value. Kathy would agree that Ark Invest has been monitoring Tesla shares, and it could be worthwhile to have a look at their predictions for the stock's future rise. Still, you wouldn't want to miss this one, I think. Ark Invest CFA Tasha Keeney states, we do definitely see Tesla as one of the market leaders in both electric vehicles and autonomy. Prior to continuing, Mumu created a new role known as the industrial chain. If, for example, you are looking for stocks that may move in the next few days or weeks, the industrial chain can be of great assistance to you. It offers a thorough overview of the hottest sectors, such as semiconductors and electric vehicles. Finding stocks quickly, either upstream or downstream, allows you to concentrate on specific industrial segments more rapidly. Additionally, since segments and industries are related, you could forecast price changes more quickly without having to read a lot of research papers to understand the relationships inside a single industry. Description contains a link. The statement made by Ark Invest's CFA Keeney does not come as a surprise because it is well known that Cathie Wood, the company's founder, has long been a Tesla bull. Several actively managed exchange-traded funds are managed by Ark Investment Management LLC, also known as Ark Invest, an American investment management company with its headquarters located in St. Petersburg, Florida. Investors looking for long-term development in the public markets might find investment solutions from Ark Invest, which only focuses on disruptive innovation. Tasha Keeney of Ark Invest joined CNBC Squawk Box a few days ago to discuss her thoughts on Tesla's most recent quarterly earnings report. Keeney responded, we have to remember that it's still an early market. When asked why she and Ark were so optimistic about Tesla, electric vehicles are just single-digit percentage points of overall auto sales. However, we firmly believe that Tesla leads the industry in both autonomous driving and electric car technology. Keeney claims that this is the case because Tesla trains its neural networks using data collected from customer automobiles. Tesla claims that its neural networks are their bird's-eye view networks, which use footage from all cameras to produce top-down views of the road layout, stationary infrastructure, and three-dimensional objects. The aforementioned networks are trained in real time using our fleet of millions of cars, which provides them with access to some of the most complex and varied circumstances on the planet. Keeney said that Tesla CEO Elon Musk reaffirmed on the company's most recent earnings call that the company will make the full self-driving beta software available to all customers in North America. That indicates trust in the platform, which Keeney notes is expected to grow to be worth several trillions of dollars over the next 10 years. Host of CNBC Squawk Box Joe Kernan questioned Keeney about robot taxis during the aforementioned segment. Keeney stated in earlier calls that they had committed to mass producing a vehicle specifically designed for robot taxis, so I do believe it may be the automobile. Additionally, I believe that manufacturing commitment is fairly significant because you can guarantee complete autonomy through software all you want. Keeney was also asked to comment on the state of the economy, fears about the recession, and whether Musk appears to be worried about supply or demand. I believe there are demand fears out there based on what I've seen in other pieces and the thoughts of other analysts. They're not grounded, in my opinion, remarks Keeney. EVs are examined by Ark Invest CFA as a proportion of total vehicle sales. She said that it accounted for about 7% of all vehicle sales in the previous year. Despite this, sales of gas-powered cars have decreased in Ark over the last few years. While sales of electric vehicles have increased year over year, Tesla's revenue increased by 50% this quarter alone, so I would consider that. In terms of macroeconomic worries, Keeney states, we believe that as EVs become more cost competitive, sales of gas-powered cars will decline, so I would be much more concerned about the companies that have that portion of their revenues dedicated to. Keeney thinks Wright's Law is to blame for this. Wright's Law attempts to offer a solid foundation for predicting decreases in cost as a function of total production. It specifically says that cost will decrease by a fixed percentage for each cumulative doubling of units produced. Nevertheless, Ark believes that battery costs are declining at a rate of about 30% for each cumulative doubling and increase in manufacturing because Wright's rule accurately predicted battery decline costs. That will increase demand and push down sticker costs. CEO of Ark Invest Cathie Wood stated in a statement at the end of September that she is sticking to her optimistic predictions about Tesla. Wood responded, we stand by all of them when questioned about her thoughts on Bitcoin, Roku, and Tesla. In fact, as shares of the Elon Musk-led electric vehicle maker fell to their lowest point in 11 weeks in early October, Cathie Wood's Ark Invest went all in on the stock, doubling down on an ambitious investment. As analysts continue to be optimistic about the company's resilience to deteriorating economic conditions as it prepares for third quarter earnings, Two of the company's funds, including its flagship Ark Innovation ETF, purchased 132,213 shares of Tesla in total, according to Ark's daily transaction reports. Based on the closing price of the stock, this represents a holding worth almost $32 million. The deals were made a day after Tesla announced that it had delivered a record 343,000 cars in the third quarter, up from 241,300 a year earlier, but less than the almost 365,000 cars that optimistic analysts had predicted. The flagship fund of Ark, which has lost more than 60% of its value this year, currently owns more than 3 million Tesla shares, valued at approximately $739 million. This represents its largest position, accounting for almost 10% of the fund's assets, compared to 8% going to Zoom video communications and 7% going to Roku. However, a lot of people are curious as to why Cathie Wood favors Tesla. Ark Invest is so confident in Elon Musk's Tesla business that the stock accounts for a whole 10% of the fund's total capitalization. This is hardly shocking because Tesla fits Cathie Wood's financial philosophies in many respects. Indeed, Elon Musk was kept from repurchasing Tesla's stock and taking the business private by Cathie's involvement in the form of an open letter to him back in 2018. The letter proved to be something of a phenomenon. It had a 5-year bull thesis for Tesla shares, with Cathie Wood projecting a price of $4,000 for the company by 2023. At the moment, Musk was content to pay $420 for each share in his fledgling stock repurchase program. Wood made the well-known claim that Tesla was a value stock. The concept of convergence proposed by Ark Invest provides an explanation for this analysis. Tesla is a firm that combines several technology industries and platforms into one entity. Rather than just being an EV play, its multifaceted nature, it develops software for artificial intelligence, specializes in robotics, and even has its own robotics group allows it to command a high price and a privileged position in the industry. Moreover, Tesla is a game changer in the transportation industry, right out of Cathie Wood's script. Ark looks for trailblazers and those who are redefining their industries. A lot of people think that while Tesla, although it may not be the only electric vehicle company in the area, it is the front runner and sets the pace for its competitors. In their 2021 open source Tesla model, Ark stated that they anticipated a share price of $3,000 in 2025. They did, however, alter this position in light of significant modifications, such as estimates of capital efficiency, assumptions and inputs related to autonomous ride-hailing, and a 1-year advance in the prediction to 2026. Based on a study of consumers' perceived value of time, Ark Invest has updated its model, which now includes updated assumptions for the whole autonomous ride-hailing industry at each price point, and the likelihood that Tesla will solve for completely autonomous driving, more demand than initially predicted, is anticipated for autonomous ride-hailing at higher pricing points. Additionally, Tesla's capital efficiency is increased by Ark Invest's upgraded model. When the Model 3 was ramping up in 2017, Tesla's capital investment per incremental unit of capacity was $84,000 by the time the 2017 model was released. That number was closer to $7,700. According to their estimates, Tesla will invest between $6,000 and $8,000 for each additional unit of capacity by 2025. Given its significantly higher capital efficiency than anticipated, it's probably realistic to project that Tesla will invest between $2,000 and $7,000 for each additional unit of capacity by 2026. To find out the precise performance of Tesla's stock, visit Moomoo, URL in the bio. The fact that Tesla is part of the broad-based indices has helped it do significantly better than the majority of the other stocks in the innovation fund. Having said that, Ark has utilized Tesla as a trading vehicle due to the company's relative outperformance, but the company is still quite optimistic about the stock in the long run. By 2026, Tesla stock prices are expected to more than treble, according to Cathie Wood's Ark Invest. Ark Invest maintained its optimistic assessment of Tesla, putting a $4,600 price objective by 2026 if it is successful in delivering a network of self-driving taxis. Wood has been a strong supporter of Tesla and has been bullish on the EV manufacturer, despite the fact that Tesla stock has dropped by more than 39% since the year's beginning. The founder of Ark stated, "It is still our top holding, and our confidence couldn't be higher." During a recent CNBC Squawk Box program, to get more content about Tesla stocks, subscribe to this channel.